Hi, and welcome to my channel. I'm Wesley, and I'm a real estate investor and developer. In this video, I'm going to show you about BRRRR investing. It's one of the many different methods of investing in real estate, and if you've been in real estate for any period of time, you know this is probably one that's been beaten over your head numerous times as the best investment method. And people aren't wrong. This is an excellent method for investing in real estate. And despite having heard of it many times, over the next few weeks, I'm going to go deeper and deeper into the subject. However, on an obligatory perspective, for anybody who hasn't heard of this before, this video is an introduction to the topic. So, what is BRRRR investing? It stands for buy, renovate, rent, refinance, and repeat. It's a strategy that allows you to purchase a property, renovate it, rent it out, and then refinance it to get your money back out. And in an ideal world, you pull 100% of your initial investment back out. And then you just repeat the process, growing your portfolio along the way. It's the easiest way to start as a lowly investor with not very much money to your name. The key to this is to purchase properties that are below market value, renovate them to increase the value of that property, and rent it out to tenants higher than the amount that you could have rented it before doing the work. Because that added value, that added income, reflects on your net operating income, the amount of money you make at the end of the year, and in turn on the value of the property. And so once you go to refinance, a bank will be willing to give you more than both you purchased and put in. So let me give you an example. Let's say you buy a property for $100,000 that needs $20,000 in repairs. After those repairs are complete, let's say that property is now worth $150,000, and you can refinance that property for 75% of the new value, which is $112,000. Now you take out your initial investment of $120,000, and you've profited, at least at refinance, nothing, but you've pulled out a majority of your initial investment. So now, just for under $10,000, you own this building and you can move on to your next deal. In a great outcome, when you refinance, that amount that you get back will be even more than you initially put in. So really, all of the success in the BRRRR model comes when you find the deal. Everything else in between is how you get to your finish line, but the initial find is the biggest part where you make money. Then you just repeat this process, you go to the next property, do multiple at a time, etc., 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 as you grow your portfolio. So why is BRRRR investment so popular compared to all these other investment methods? First and foremost, it's a really great way to build your wealth over time. You know exactly where you're starting, and you can guess, and if you're very proficient in your mathematics and your assumptions and you know how much things should cost, you can guess how much you're going to be leaving the deal with. You have a clear in and a clear out. And by the time you get to the finish line, you're going to be pulling your money out and moving on to the next, meaning you don't have any more money left in this deal, but you still own the building, which is very lucrative, meaning you're going in and buying buildings, growing your portfolio, while taking your money out every single time. That is the golden rule. However, it's not without its risks. You really have to know real estate to go into this safely. There's a lot on the line. And if you don't get good terms on your refinance, you could end up losing a lot of money. When you purchase a property, you need to be very certain about the repairs that it needs, as well as how much that's going to cost. These assumptions make or break your finances. And in the worst case scenario, you go in for much more than you expected you needed to, and when you refinance, you don't get back a fraction of your earnings. Still, there's opportunity, and there's many deals out there that even if you don't get 100% of your money back, you still end up on top, because then you look into your cash flows, how much money that building makes after the refinance. If your dollar earns you 50 cents per year, that's a great return on investment. But still, in that ideal world, you want to have all of your money out. That's why it's essential to do your due diligence when you're considering this method of investment. There's a lot of strategies along the way to improve your chances of success, from how you find the deal, to how you do your renovation, to how you refinance. What kind of loans do you get in the beginning, and what kind of loans do you get at the end? And what special strategies might you have to get into exceptionally good scenarios when you're starting out? Because like I said, it's the deal itself that needs to be the good one. Your money gets made the moment you make the deal. Everything in between is just the work it takes to get it done. So you need to have a solid plan for how you get in and how you get out and how you place those tenants and do your management afterward, which is why the BRRRR method has so much more that we can discuss as we go in depth in future videos, going into unique niche strategies to do a better job, to make more, and to grow your portfolio. So that's basically it. That's the BRRRR method in a nutshell. By using this strategy, you can grow your real estate portfolio, generate passive income, and build wealth over time. Thanks for watching. This is among my first videos. If you like it, please subscribe and let me know in the comments that you enjoy this sort of content. And especially as I get into the niche, let me know if it still remains understandable. Have a wonderful day, and thanks for watching.